Hi, folks. This is Mike Zlatnik, Big Mike, and today we're going to talk about precious metals, gold, and silver. One of the most important questions: gold and silver, investing in gold and silver, a good hedge against inflation on a long term basis. But before we dive into that, the usual disclaimer: this is for informational and educational purposes only, no solicitation of any kind, no advice of any kind. If you're interested in any of our funds or syndications, request PPM, private placement memorandum, to create investors only, consult with your attorney and CPA professional. Now let's talk a little bit about gold and silver. And there's some anecdotal evidence of gold and silver not being a great hedge against inflation. So let me chat a little bit about my experience. And again, this is my experience. Some folks have seen, and I looked at some historic data. So from a historic data perspective, gold and silver has had a reasonable positive return versus US dollar on a long-term basis. And these returns are somewhere in the 7 to 8% range on a long-term horizon. But there are periods of time when we are in a high inflation like we are now. But gold and silver doesn't feel like it's a great hedge against inflation. Why? Well, gold and silver is definitely a great hedge against war, volatility, uncertainty, civil unrest. These are the periods of time when gold and silver feels like a phenomenal way to store wealth and to protect against volatility. Of course, if you're dealing with a currency that is collapsing, highly inflating currency, then any hard assets will be theoretically a good hedge against inflation. But we're dealing with dollar. That is a reserve currency. It is not a collapsing currency. It's a strong currency. In fact, majority of the world is happy to keep their wealth in dollar. And in the last few years, we've experienced high inflation in the post-COVID world. And gold and silver hasn't been a great hedge against inflation. But on a very long-term basis, it does appreciate as the dollars in circulation increase. So in general, you could use gold as part of your portfolio. I own a bunch of gold and silver coins, and I feel great about it. Precious metals is a form of hard currency, is a way to diversify, and is a way to have something tangible in your hand that you can enjoy. From that perspective, it has that feature, but it doesn't reproduce. That's one of the biggest problems that Warren Buffett doesn't like with precious metals. It just doesn't reproduce. It doesn't pay dividend. It purely appreciates in price over time, driven by increased money supply of dollars. That's the general reason folks would consider investing in gold. And again, as a hedge against significant war uncertainty. That's the way I put it. This is in my world how I could see gold and silver being useful. It's bright and shiny object. The folks say don't chase bright and shiny objects, but there's a place for it. You can have some bright and shiny objects in your portfolio, in your safe deposit box. So nothing fundamentally wrong with gold and silver other than it doesn't pay dividends, it doesn't reproduce, and it doesn't necessarily act as a great hedge against inflation even during the periods of high inflation. But things may change in the future, right? So it depends. And the other very important point why gold and silver don't look very attractive during the periods of high inflation. The simple reason is typically high inflation triggers interest rates to go up. And we've seen this in the post-COVID world. The Fed, that was asleep for a while, said, wait a minute, inflation is no longer transitory. We got a real problem on our hands. So let's push the interest rates up fast and furious. And they did that. When the interest rates go up, that becomes really bad news for gold and silver, precious metals, because as a substitution effect, folks want to keep their net worth or some portion of their net worth in treasuries, in US dollars, money market accounts that pay high interest rate. So precious metals, commodities, even stocks don't really like high interest rates just because of substitution effect. That's as simple as that. So that's my 2 cents. Now let's just cover a couple of words about real estate in this high interest rate environment. I'll speak to this just a little bit. The high interest rates make it more attractive to make loans. If you're a lender in real estate, you could get higher yields. This is the beauty of high interest rates. And we do quite a bit of this in our income-focused funds. As interest rates climb, we are more interested to invest in debt instruments in real estate, secured by real estate, increasing the safety and increasing the return on invested capital in the form of a lender. So there are opportunities to make better returns in real estate when interest rates go up. But there are also opportunities to make greater returns in real estate in equity when the interest rates go up. Why? Because you can buy deeper, you can buy better. As interest rates climb, typically it puts pressure on the owners. And if you're deploying fresh capital, you don't want to pay yesterday's prices. You want to get a better price. And if you can get a better price, you can get greater appreciation on your investment over time. So the opportunity exists to invest in real estate, even during the periods of time of high interest rates. Now, in general, high interest rates is a headwind for real estate ownership. That is the truth. As an equity owner, if you have to refinance your mortgage, we have a variable rate mortgage, and you have to pay high interest rates than you were paying before. It's less cash flow for you, more cash flow for the lender, and more pressure on you as an equity owner. So you just got to buy deeper. If you buy deeper, better discount, then all the math works out. So at the end of the day, that's what we see in real estate. Be a lender, loan at high interest rates, more conservatively with high interest rates, and then on the equity side, invest at the projects that you acquire at a better price from these sellers that are motivated and have to sell. That's the way it works. And back to gold and silver again, I love gold and silver. I have no negative feelings about gold and silver. Precious metals are absolutely awesome, great to have. It's just as a investment strategy, I cannot see writing large amount of capital into that strategy. It's simply good to have some of it as a diversification play. That's the best way to put it. If you want to diversify, have some gold and silver and enjoy your gold and silver coins. Also, platinum and palladium fall in the same category. Obviously, platinum coins are pretty cool too. So enjoy precious metals. Just think about if they are the right place as an investment strategy. So appreciate you. Until the next time.